Hi guys, it's Maynard. It's Tuesday and it is Technology Week here in Houston. I'm lucky to have my amigos, Mike Bradley, Matt Portillo, and Colin Fenton. But we're particularly lucky to have this week Emily Reichert, the CEO of Greentown Labs, and also Brad Burke, the Managing Director of the Rice Alliance. If you didn't know, this is a huge week in Houston and therefore a huge week in energy for technology. Emily's in town because Greentown Labs is announcing that they are going to establish a Houston incubator, and we'll hear about that. Brad and everyone at Rice continue to be a great, provide great leadership in the technology community. They've got some great things going on this week, and we'll hear a little bit about how they'll work together and in general spend some time talking about the Houston technology community and how it's going to help all of us overall. So welcome, Emily. And welcome, Brad. Guys, before we jump in, my screen was green this morning. Mike, what's your take? What's happening? Retail sales, Japanese stimulus, Beijing schools. There's a few things going on.
Yeah, it's a little of everything. I mean, like Maynard said, I think the big thing was just retail sales, had a huge jump. And that was very, very unexpected, double expectations. And so that got everything just running today. I'd say there was some news on maybe a COVID vaccine type drug that's able to basically stave off some of the symptoms. So you had that, and so I just think I think people have generally been negative here in the last couple of days. I think people are expecting the U.S. to really have a second wave of coronavirus. That's been kind of hanging over the market, and everything just sort of reversed here, and so. That's what we have today. Now, what I would say is with that backdrop, you had some, more negative news as it relates to China. It looks like they're having some more cases there. They're kind of shutting down one of their bigger cities. And what does that mean for crude oil and, commodities and et cetera? And I'd say I feel pretty good about the trading action today because even with that news, crude oil is still up pretty good. Crude oil is in backwardation and commodities are still running. And now you have have on the backdrop what we've been talking for the last 2 or 3 weeks is just a weaker dollar. You have that as well. So that's a really positive thing for commodities.
So speaking of commodities, Matt, you've been a gas bull longer term who's been a short term concerned about gas. What is $1.60 now? What's the latest on natural gas from your perspective?
Yeah, Maynard, I think with the pullback, we should start to see a floor forming here on natural gas. There's a couple of things that are still working as a headwind for the commodity. We've got production rebounding from an associated perspective. So off the trough, we're up about 1.2 BCF a day, which translates to about 500,000 barrels a day of oil. That's likely made its way back into the market here in June. That being said, a lot of the weakness in natural gas has been driven by concerns of supply ramping. So we're now seeing that supply show up, and I think that factor will be taken out of the market. Additionally, our other big concern was LNG demand was going to plummet going into June and July. That's actually occurred. We're down to less than 4 BCF a day of LNG exports out of the U.S. But again, we think we start to see a floor on those exports as we move into the back half of the year. European inventories seem to be stabilizing, and as we head into 2021, we should set up for a situation where we get some normalized demand for natural gas globally, and that will help the LNG market. So while we're still concerned near term, we think about $1.50 is a good floor. Producers really are going to be hesitant to complete wells in this environment. We've seen some of the Northeast operators actually shut in production. And so we don't see a whole lot of downside risk in the very near term, maybe another 10 cents or so on the curve. And we still remain very constructive on the 2021 outlook with the potential of a 275 plus commodity backdrop. So while we've moved to the sidelines on the equities over the last few months and we've seen a lot of downside risk on the front end of the curve, I think we start to see a more constructive backdrop in the back half of the year, and it may be time to start to revisit some of the stocks that have kind of pulled back here a little bit.
Okay. Colin, the last time I saw you, it was 1 a.m. and you were talking about the Japanese central bank. I don't know if that was a dream or if that really happened. What's on your mind before we jump in with Emily and Brad?
Well, I've been most struck that we've had these stimulus packages incrementally announced. We had the Japanese one that you just talked about. We also had the Fed confirm what some people had expected, that they'd buy individual bonds. And looking at the Main Street lending facility on the balance sheet of the Fed, it looks like that expanded by $32 billion last week alone. So that's a lot of bonds. And so you definitely have a liquidity effect. What makes me a bit cautious is the smattering of geopolitical stories. So the bizarre story of North Korea blowing up this facility on the DMZ. You have Lebanon has street protests because it has a very tough economic situation. The currency is in trouble. You have Syria is in severe economic distress. And of course, Venezuela as well, with this story of the financier of the Maduro regime being arrested in Africa, and we'll see what happens with him. So just a couple of fingerprints of geopolitics that we're not really paying attention to that make me a bit nervous. But we do have a $40 price now for average 21 for WTI and almost 44 for Brent.
Well, Colin, we also have, I can't remember if it was last week or the week before, reports of Indian troops being killed on the border with China. So there are some strange, perhaps unsettling stories out there.
I mean, they're obviously all low probabilities. You don't want to inflate them beyond what actually is the real risk. But taken in aggregate, those are a lot of hotspots to all be burbling at the same time because of economic distress. And commodity markets can tend to focus on their nose despite their face. And so we just have to be careful to remember that those risks are out there.
Well, let's jump in with Emily and Brad. We'll start with Emily. She's our guest, meaning Brad, you're our guest too. But Emily, you're new to Houston. Greentown Labs is new to Houston. In fact, this is the big day. You've got your press conference today. Would you mind just telling our audience exactly who Greentown Labs is and what you see your mission here in Houston? And one more time, welcome. We're very happy to have you.
Well, thanks so much for the warm welcome. And that's reflected in so many warm welcomes, including from Brad and from Rice, that I've had over the last 15 months as we've been exploring this expansion. So Greentown Labs is the largest climate and clean tech incubator in North America. We are based just outside of Boston in Somerville, Massachusetts, where we operate a 100,000 square foot campus. And on that campus, we have space for more than 100 companies, and those are the number that we have in residence today. And those companies make use of a variety of different resources that Greentown Labs provides through our programming. So, for example, we have a 40,000 square foot prototyping space. We have a wet chemistry lab. We have machine shops, electronic shops, office space for holding meetings with investors, and then a large community space. And in fact, behind me, you see a picture, not of the Houston hotel room that I'm sitting in right now, but of the event space of Greentown Labs up there in Somerville. And this is just one of the things that we do, and we hope to do in Houston a lot, is bring together the community around clean tech, the environment, climate, and really have engineers, scientists, business people, professionals, universities, and others who are interested in this community, interested in the energy transition, really coming together and working together. And so that's something Greentown Labs does in the Boston area, and we're very happy to do in the Houston area. Just to say a few words about the 100 startups that we currently support. So those companies are on the early side of things. They are at the seed stage of investment, typically through the time that they raise a Series A round of investment. And during the time that they're with us, we work actively to help them to identify partners, whether they be corporate partners, civic engagement partners to test the technology, new customers, and other kinds of investors, even manufacturing partners. Their journey with us is usually about 2 years in duration, and then they launch their own independent company. And thus far, we've supported 280 companies total, and 88% of them are still in business today. And I have to say that's because we are good at picking them from the very outset. So I'd say we pick winners if that's allowed. But the companies that we work with are very strong and have a lot to offer the energy world in general, but certainly are very focused on really reducing greenhouse gas emissions through their technology that they're developing. So that's a little thumbnail. Happy to dive in more as we get into the discussion.
Well, one question I think that's on particularly anybody in the energy community is even if you don't live in Houston, you spend a lot of time here. What drew you to Houston? How did you think about, because it's obviously the capital of the current energy world, but how did you think through what you were looking for and why Houston made sense to launch what is hopefully the future of the new energy world?
Thanks for that question, and it is a really important one. This is our first ever national expansion outside of the greater Boston area. And we're so excited that it can be in Houston, Texas. And why Houston? Well, I think that it's kind of pretty simple in one sense. Houston is the energy capital of the world. And it's undeniable that this is where a lot of the talent, engineering strength, assets, customer base for the energy world is. And so to be here just makes a lot of sense for an organization like Greentown Labs. That said, I think that Houston is embarking on, through the leadership of the mayor and the business community here, a new era in how they think about energy. And a lot of talk has been put forward and I think is real around the energy transition and Houston's leadership of the energy transition. And many of the big oil and gas companies here are already in that and have been in that for years. If you look at what Shell is doing, BP, others are very active in kind of what's next for energy. And I think that's the direction it's all moving. We need to be able to have the technologies and the solutions that are going to be needed to create a carbon or decarbonized economy and frankly, reduce greenhouse gas emissions as quickly as possible. So I think that there are many, many opportunities here to work with the corporate partners that we already have and many more we probably haven't even met yet to address the global climate challenge that we face and build and bring the technology, both building it from Houston, but also building a bridge between the Boston ecosystem and the Houston ecosystem, full of engineers, scientists, business people who are really, really well positioned to address this challenge.
One thing, Emily, that came up last week, we were talking to Neil Anderson, the president of WoodMac. They do a lot of research around the planet, and he, coming out of that conversation, he kind of made 2 points that we thought were really interesting. One is the changing definition of transition. It used to mean we're going from oil and gas to renewables. And now what it means is we're going from basically what we're doing now to doing it with less carbon. And that means carbon capture, hydrogen, a whole bunch of things are entering the discussion. Is that how I'm leading the witness because I know that's how you think about it. But you have a PhD in physical chemistry, so you are a scientist. Tell us how you think about all the solutions and where they might come from.
I remember just enough to be dangerous, Maynard. So,
well, that's more than the rest of us.
Some of the solutions you mentioned are actually subjects of programs that Greentown Labs has run in conjunction with corporate partners, and as well, it will be the future of programs that we'll be running with corporate partners. So hydrogen in particular, we've actually done quite a bit of work around hydrogen and mobility. And we have a company in Greentown Labs in the Boston incubator that is focused on very quick and fast refueling of hydrogen vehicles that is inexpensive. And then in terms of carbon capture, that is actually absolutely a critical area that we all need to be working in. And I can't think of a better place in the United States and frankly around the world for that technology to be built and tested, because you have the assets here and the expertise and the knowledge that we're going to need to be able to scale that technology to be cost effective. So there's really no other place I see that if it's going to be cost effective, it's got to happen here in Houston.
Well, that's fantastic. We can go from Clutch City to Carbon Capture City. Maybe that can be our. Brad, you're a long-time resident of Carbon Capture City. And Rice has, seriously, you guys have done so much to push the envelope and begin to build the community, particularly the entrepreneurial community. You got to be excited about Emily coming and seeing this whole ecosystem growing. Why don't you tell us how it feels from your seat these days?
What I've seen is the technology community and the entrepreneurship community accelerate in a great way over the last 5 years. And having Greentown Labs be a part of that is just one example. In fact, when Emily and I first met about 18 months ago, maybe now, my first question was, how do we get you to actually physically, you moved down to Houston as well, in addition to opening up Greentown Labs.
And I said I didn't think my husband was going to go for that, but we're still working.
I said I'd find him a position at Rice, but that conversation has not advanced since then. But
Sorry.
It's an exciting time in Houston for a number of reasons. We're in our 20th anniversary year this year. So we were founded in 2000. And so I've been here most of that time for 20 years. And the growth is amazing and in a number of different ways. That, as many people know, that Rice is committed to launch the ION space at the old Sears Midtown building. And it'll open up in the beginning of next year, beginning of 2021. And there's about just under 30 square feet of space for startups to serve as a real startup hub for Houston. And I think that's going to be one of the most transformational projects for the Houston community. So I'm very excited about that. And I have to also say, and you may ask, if you've alluded to it, is this is a big week for us because this is the 20th year of the Rice Business Plan competition. We think, based on our research, and since it's our research, we'll stick with it, we think it's the largest and richest student startup competition in the world. And so it's a student startup competition, but these are generally PhD and MBA graduate students who have a real technology, and they're seeking to launch it when they graduate. And so we have 42 startups from around the world I'm used to saying this, come to Houston and come to Rice to compete. For the first time ever, it'll be virtual. So we're going to kick it off tomorrow on a virtual basis. So for the first time in 20 years, we will be seeing all those energetic faces on our campus, but we'll be seeing them virtually. And so we're excited because we award more than $1 million in prize money. And we also track everyone who comes through, and they're like our children. So we've had 688 startups come through. Of those that launch, about 2/3, or just under 2/3 are successful, and these are pre-seed companies. And they've already raised just under $2.7 billion in funding. So I used to get asked, well, these are just students, so these aren't really, they're doing it for fun. These aren't real startups. Well, maybe first year of the competition in 2001, the 9 startups that competed for $10,000 were mostly doing it for fun. But the 42 startups that are here this year are going to compete for more than $1 million. They're, for the most part, very serious about launching their company, and they have a real technology often coming out of their own university. And so we're excited about that, and that'll kick off tomorrow. Maybe,
Emily, I think one thing I know we're used to hearing here at TPH is that when you do this, when you do the emerging energy technology right, you have links to academia, you have links to industry, you have links to money, and you find a way to bring that whole swirl together. I'm curious. You work with so many universities. I know you'll be working with Rice, but could you comment on how you try to create the swirl and get everybody involved and get them all working together to make this all happen?
Love the description of the swirl. I think I might steal that. Although we usually refer to it as an ecosystem in kind of my Boston startup parlance.
I think it's my Dairy Queen influence as a child is coming out. The swirl was always really good.
But I'll go with the swirl for today. So Greentown Labs absolutely sees it as part of its mission to create that swirl. And when you're building an early stage company, it actually takes a village. I know that's a well-trod phrase, but you need certainly the universities who are harboring and fostering the great ideas that are going to be companies. The folks that would be coming through the Rice Business Plan competition are wonderful potential future applicants for the Greentown Labs incubator that will eventually be in Houston. And we've certainly already had some Rice Business Plan competition folks that have been in the Boston incubator. So certainly universities are a really important kind of bedrock part of what we do, those relationships. But we also work with just a wide range of investors who are very interested in this particular technology area. And so over the years, we've interacted and curated about 400 to 500 different investors who are interested in specifically hardware and clean tech, and sometimes some of both. So those folks really need to be engaged, and we have a program that's really all about that engagement and prepping startups to really do that successfully. We also work very closely with a lot of corporate partners, and large companies need access to innovation, and startups have innovation, but then the hard part happens. How do you actually connect those two so that they can speak the same language? You have a company with 4 people or 10 people trying to access a company that's 160,000 people. Forget it. It's really hard. So Greentown serves as kind of a matchmaker, a bridge, and actually helps to prepare startups and, frankly, the corporate partners as well to be good partners and to achieve partnership outcomes like pilots, like investments, and like customer relationships. And I'd say the other participants in the ecosystem are all the other wonderful startup support organizations that are already out there in Houston and Boston and many other places. And all of us kind of play a slightly different role. And so I think that there's room for everyone. And there's also just many things we can do together to support startups better. And then finally, we're just blessed to have a lot of professional services partners that want to make sure startups get off the right foot. So we work with law firms and accounting firms and others, HR, PR, marketing, you name it, to really make sure that startups make their companies at the very beginning something that an investor will appreciate later, because there's a lot of mistakes you can make at the beginning if you don't know what you're doing. And we like to help startups build great companies.
Well, one last question for me, and Matt, you jump in here. But Brad, I'm curious, you mentioned you've been doing this for 20 years. It doesn't seem to be the case that in the middle of a global pandemic and with so much other stress in the world, that this would necessarily be the time that all of this stuff would be taking off like it is. But on the other hand, it does seem like the momentum has shifted here, and we're about to, perhaps really usher in a new age of activity. I don't want to be overly optimistic, but it feels that way, and it's coming at a bizarre time in the world. How do you think about that? Because you've been watching this for a while.
I've seen a number of downturns over the years, and I'm pretty optimistic about that. I've seen data that says a large percentage of successful companies in Fortune 500 companies were formed in times of recession, in times when the economy was not good. I think there are also opportunities for individuals to become entrepreneurs in situations like this, when maybe there aren't as many other options available. And so it is can be a great time to do this. When I talked with some of the energy VCs, some of the corporate energy venture capital groups, they'll often say that their business units are most interested in the innovations they can find when crude prices are down. Heard them say, when crude prices are 100, everybody's making money, and so they don't, optimizing that 10 or 20 or 30% isn't as important. But when oil is down at 39, 40, $50 a barrel, there's that much more interest. And what has changed in Houston over the last 5 years, there's 2 changes. One is almost every major energy company and service company either has a corporate venture capital group or a technology scouting group. And I wouldn't say that was true 10 years ago. And so, that has been one big change that's taken place in the ecosystem now, that the energy corporations are much more involved. And the other is there seems to be almost every major energy company now seems to be focused on not only the traditional oil and gas business, but this energy transition or new energy. And I think that's really positive for Houston, because I think that Houston It's the energy capital of the world. Needs to continue to have the mantle of the energy capital of the world as we go through, and I don't know how long. I'm not smart enough to predict how long this energy transition is, but Houston needs to continue to be the energy capital of the world in the future. And I think the energy companies seem to understand that now.
Well, it's also the entrepreneurial capital, or one of them, of the world. We'll have to get Mattress Mac out to meet Emily. You've got to meet this guy. He started Gallery Furniture. Guy's amazing. Okay, Wes, we wrap up here. Matt, any questions or observations from you?
Yeah, Emily, I'd love to actually follow up on that train of thought. For research, sitting kind of in the equity role here, we are noticing a pretty significant shift from investors that we talk to that are looking at traditional energy investments as well as opportunities in the energy transition space. And so I was just curious if you could characterize maybe the level of interest and kind of the shift in this business model over the last few years, and how maybe some of your funds or the firms that you're backing are possibly going to drive a new transition in how energy is produced, and how we may be able to clean that energy over time to really create an affordable source of energy and consumption globally, but making it in a clean way.
Yeah, well, I think affordable is the name of the game here, right? It's got to make business sense, and we wouldn't be a incubator that is a business itself and one that supports small businesses if we weren't driving that point home. And so, I think that that's maybe what the thing that has changed over time is that there is definitely an acknowledgement that, for example, renewable energy technologies have become less expensive. Yes, they have intermittency issues, but energy storage technology has become less expensive. And in fact, to give you one example of a company that is going to be changing energy fundamentally as we know it, I would point to Form Energy. It's a startup at Greentown Labs who just announced a pilot that they are going to be doing with a utility in Minnesota. And that pilot is going to demonstrate a battery that has 150 hours worth of capacity really at that utility scale versus lithium-ion batteries that would be more along the lines of 4 hours. So that's huge. So those are the type of innovations that are coming out of Greentown Labs that I think the corporate community and investors are getting a hint of. And frankly, these things are going to make money. The world is going in this direction. And so you can either be part of this story or you can not be successful. I mean, I think it's that simple. And, Europe has its Green New Deal. Other places around the world are marching forward. So I think that it is, especially for global companies, they see which direction things are going. And the fact that these technologies are also getting less expensive means that it makes business sense as well as sense from a climate or environment perspective.
And just one follow-up question for me. In terms of the clients you're talking to on the corporate side, you mentioned some very large integrateds. They seem to be at the forefront of this conversation. Curious on the interaction front from an independent perspective, so the small, medium, and kind of larger independents, and how they're thinking about the technology evolution here and potentially incorporating that into their business model, especially as it relates to shale.
I have to say I haven't really engaged with that set of corporate partners yet, but I would be happy to be more aware of the challenges that they're facing going forward. And I bet you there's an entrepreneurial solution out there somewhere to help them reduce the greenhouse gas emissions associated with the production and help us all move forward to a place where we're really balancing those environment and cost and environment objectives.
Colin, anything on your mind?
Yeah, this is a question for Brad and Emily. I'm interested in the fact that you've seen so many hundreds of companies now, and I would imagine that they begin to cluster around some comparable strategies. And so we just talked about batteries. We talked about hydrogen. We talked about direct air capture. We did not talk about nuclear, but maybe there isn't room next to the wet chemistry lab for the nuclear reactor. But what, if any, other strategy do you see picking up that, is kind of in that same bucket as being really interesting and it's getting people excited?
I think that you've already mentioned a lot of things that have folks excited, especially in the corporate world, of bringing new innovations into their companies. Say a few others, and really the way that we think about this at Greentown Labs overall is reducing greenhouse gas emissions. So technology areas that do that tend to be where we focus, and frankly where we see the focus of a lot of the startups that we bring in. So agriculture is another area where there's huge input, both of energy, of chemicals, of water, and all of those inputs are generating greenhouse gases, not to mention the animals themselves when you get to livestock, but I don't think we need to go there on this program today. So that's another area that we see a lot of activity in, both from the investment perspective and from the startup perspective. I'd say that we also have companies that are doing things to try to decarbonize industrial processes, reduce the amount of heat use. And those are really hard challenges to solve if you're separating different chemicals. For example, we have a company that is working in that area that's called Via Separations, and they are trying to make processes around separation technology less carbon intensive. So there's a lot of different industrial technologies that really need to be looked at overall. I'd say transportation is another huge area of opportunity, and the opportunities there are so numerous that, you know, it'd be hard to list in this program. You start with EVs, but there's also hydrogen-powered vehicles. And then there's the question of whether or not autonomous vehicles is really something that's more carbon efficient or not. I think the jury's still out, but we've got companies working in that direction as well. So those are a couple big areas that we definitely see focus in, and you know, I think say a final one, and I think is apropos of this moment in time, is around resilience, and how do you prepare cities, especially as we're sitting in here in Houston today, for floods? How do you get communications going? How do you understand what the conditions are in a particular area? So it's kind of IoT-based monitoring of different conditions and different infrastructure is another area that we've seen quite a lot of activity in.
Brad, anything you'd add to that?
Yeah, I'd say that, you know, the whole area of advanced materials is getting a lot of interest. Recently saw a company that has the much higher temperature insulation and fire retardant properties in a much more cost-effective way. So there's the whole area of advanced materials is very broad. And the area of catalyst and photocatalyst. So Rice has recently spun out a company that raised its seed round of about $6 million called Syzygy that is able to produce hydrogen at a much lower cost, much more cost-effective way. So is another area. Robotics is a third, and there's certain applications for robotics. And a fourth, and it's not so much hard science, but this whole area of digital machine learning, big data, and advanced analytics. We've seen a great deal of interest from the energy companies and how they can use the information that's available, or to gather more information more readily, and then actually turn it into information and not just data. And so this whole information, software, big data, machine learning, another area that's gotten a huge amount of interest.
Fantastic. Mike, anything from you?
Yeah, I thought it was interesting. I've heard some of these oil majors, somebody being categorized them as they have to turn into energy majors going forward. And it feels like they're kind of out in front, but I'd like to get your opinion of, are they out in front? Are they part of the solution? And where do they come, you know, where do they stand within the whole framework of the investment standpoint, you know, with these startups? I mean, are they the eventual buyers? Are they working alongside of them? Or what do you see in regards to the oil majors?
Well, I think they have to be part of this. There's no question that this is the direction that everything is going. So I'd say the oil majors realize this. And really, I'm speaking again of the biggies, the ones that everyone would know because they've pulled up at a gas station with that name at some point in time, which is what I can represent today. But they are very engaged, and I'd say the options that you just ran through it's really all of the above in terms of how they engage. Certainly investments is one way we see them engage, but also if you are talking about a carbon capture technology that needs to be tested, I mean, where else are you going to test that except with people that really understand all of these materials and geological features if that's involved? So oil and gas companies are really the ones that are going to need to be involved in testing that technology at scale. And then customer relationships, absolutely. We've actually seen companies invest. An oil major, I think Shell actually invested in a technology that they really weren't going to benefit from directly, but down the road, I think it was their energy, probably an energy service provider would be buying that. And so it would make their overall economics look better. So there are many, many different paths for engagement, anything from licensing and, from a startup perspective, sometimes it's just knowledge. Like we need startups need so much in terms of understanding of markets. Like what does the market actually want? Because you're not going to find that if you do a Google search, which is where a lot of startups, especially, coming out of local universities, we see that's where the market data is coming from. So they need the corporate partners to tell them what does the market need, what does the market want, what are the pain points, and then direct them towards that outcome, which actually helps everyone because it gives the market something it needs. It gets the technology to scale because there's an actual economic reason to do it, and it addresses emissions. So, you just really can't go wrong with those type of partnerships.
Brad, anything you'd add to all that?
Yeah, I think, that's one of the biggest changes I've seen over the last 5 years is that, as I said earlier, almost every major oil company is now actively either scouting for technologies for their business or scouting for investments. So that's the oil and gas operators, the majors and the super majors, but also the service companies. So all the major service companies are more likely scouting for innovations and scouting for potential acquisitions. And so we do this speed networking event between the energy and clean tech startups and the major oil companies and the service companies. And so it's grown to where last fall we had 75, we had a huge room at Rice, and we have 75 tables, and each corporate had minutes to talk to companies. So we ended up, over a course of 2 hours, ended up having about 750 speed dates. And these speed dates are there designed to allow the startups to find customers, to find pilots, or to find investment, or someone who can provide them strategic advice for their business. And that has been a big growth that we've seen over the last 5 years.
So Brad, you're not only helping transform technology, you're changing the M&A business with a format like that. We may have to pay you a visit, learn more about that.
Well, I tell you, I had a private equity firm participate and came the 1 year, and then 12 months later, when we invited them back, they said, oh, by the way, one of the companies that we met at the event, they had already acquired in the interim period of time. So it's not unusual that we ended up some of these, I call it, and people don't usually laugh, and so I look silly, but, love connections. Sometimes with these speed dates, what we're trying to make is love connections happen.
I feel that too.
Yeah, exactly. Where a company meets, an investor meets a startup at the event, and ultimately, after a little bit of due diligence, ends up investing, or or acquiring that company.
Well, I think we'll have to wrap up and say this week in Houston, technology and love are both in the air. We really appreciate all you guys are doing, your organizations, what you're advancing, a very important cause for Houston, for energy, and for all of us. So thank you, and really appreciate you joining. Emily, particularly, you're walking to a press conference here, I think. So thank you for making time. Brad, you as well, and appreciate all of you. Thanks, guys.